Good morning, everybody, and welcome to What's Hot Now on the Open here at MarketStream.live. My name is Joseph Cusick from the Cusick Group, securities offered by MoneyBlock. Wow, what a hump day we had yesterday. The Dow Jones Industrial, the S&P 500, the S&P 500, S&P 400, the mid caps, the Russell 2000, all closed at record highs. You now have the bell just ringing, and we also saw the Dow Transports finishing at new highs. This is incredible, bullish, and we've seen it globally. In the overnight action, we talked about Asia and Europe just moving to the upside, and it's been very impressive. And they did so not only with just the price action and the big gains, but there was some pretty hefty volume, as we discussed last night on the closing bell. This basically suggests, folks, I guess in the infamous words of MC Hammer, this market is just too legit to quit. Yes, I said it. Could there be an encore performance today? It's not improbable. I mean, it doesn't take too much to get it 1 point higher from its close and basically have new highs. That's the area that we're at in all of the major averages. But it would be surprising if we had the scope and the scale that we had as far as the gains yesterday, today. So you really got to look at this and you got to break down yesterday's rally. And while I think yesterday's rally was a little bit sneaky, it did breathe some life into the notion that, you know, this market is getting prepared potentially for some pullback, especially after the unbelievable parabolic move that we've had since Election Day. So basically what we're doing is that we're looking for an opportunity as we look at these markets, especially in the open right now. We see everything's pretty firmly in the green. I think what most investors and traders are looking right now is looking for that opportunity to pull back, to buy onto weakness. And that makes sense. But the issue is going to be twofold. One is the reluctance of anybody to sell, even in front of the end of the year, to take profits or cut losses, because of the fact that we're looking at 2017 and a Trump presidency that could have some favorable tax consequences, so we don't have to sell versus what we were looking at if Clinton were to get in office. So there could be a reluctance for institutions and individuals for selling into this recent rally. Now, taking a look at the market action right now, it's definitely not selling off at all this morning. As a matter of fact, you have the S&P futures up about 3.5 points at 2240.50. You have the NASDAQ up 11 at 4852.50. You have the Dow Jones up 51 at 19,567. And you have the Russell 2000 up at about 550 at 1367.60. Some of the drivers this morning, for this price action to the upside, not as just the catalyst from yesterday, but it's the overnight action that's been driving a lot of this as well. Specifically, we saw China. China came out with some critical data that we talked about last night. They released this data on the closing bell. We mentioned overnight they will be releasing some trade data, and the trade balance came in better than expected for October. It actually featured a 0.1% year-over-year increase in exports. Okay, so that's to the upside. But what was equally as impressive and unexpected is that they actually had an increase in exports of 6.7% year-over-year. These are rare sightings coming out of China, where you have exports higher than imports higher than exports. It's impressive. And this could just be something that's a little more systemic, basically telling you that the global markets are thinking that the global economic activity is going to start picking up not only into the end of 2016, but potentially into 2017. We also saw that Europe, the ECB came out and they basically, the central bank said that they are going to continue their purchase program post the March expiration on their current program, but they tweaked it. They changed it. And this was the concern that the market had, that they were going to start talking through taper, through actual actions. And so their $80 billion euros that they are purchasing on a monthly basis will continue into March of 2017, but they made an adjustment. After March, they are now going to 60 billion euros per month, but they're going to do that through the end of the year. In other words, through December. Now, the simple math, as I talked about in the overnight action, is this. There was anticipation that after the March expiration, they would extend it for 6 months at 80 billion a month. That basically means that they would be buying back or purchasing about $480 billion worth of debt. Now, extending it 9 months at 60 billion actually means that they are going to be buying 540 billion. So they're extending it out 60 billion versus what everyone expected. That's why you see Europe still to the upside. You see all of the major European indices to the upside. You see the bond yields in Europe starting to rise significantly, basically between 6 basis points and 13 basis points this morning. So ECB President Draghi, being the dove that he is, has shown now that Europe, while going to taper, is going to do it in a prudent way, and they always stand ready to increase the size and or duration of its current program, so they leave the future options open. So it's very positive coming out from Europe. Currently you see the euro currency down about 1% against the dollar at around 106.58. Again, with that, the thoughts of monetary policy divergence between the ECB and the Federal Reserve, we'll watch this. The dollar index is up about 0.5% on this news this morning. We're going to watch the dollar. It has been actually a little bit weaker over the last couple of sessions, so this firming makes sense after what we've heard out of the ECB. But, you know, this is positive. Some more positives that have come out this morning on the opening bell are the economic developments here in the United States. Initial claims came in for the week ending in December 3rd. They decreased by 10,000 at 258,000. This is right in line with expectations. This also marks the 92nd straight week that they've had below 300,000 claims. Continuing claims for the week ending in November 26 dropped 79,000 to 2 million, basically. Pretty much so the same thing on initial job claims. They're all offering very encouraging labor and market statistics and outlooks. So all in all, things are looking up for the economy, which, guess what? That means next week when the Fed meets on the 13th, this is plenty of fuel for them to raise rates. The CME Fed Watch tool continues to price in the probability that they're going to raise rates over 94%. It's actually a little higher than that this morning. Bottom line is that unless there's some sort of headline that can throw some water on this fire, and it's going to have to be a pretty significant one, it looks like the catalyst right now is in the bulls camp. And that's how we're going to treat it this morning and for the remainder of this trading day. So that's it for what's hot on the open right now. Join me at Strategy Now at 1:30 Eastern Time. That's where I'm going to break down specific stocks, specific strategic approaches, what's hot, what's going on. Now that we see that this market is moving to the upside, we want to basically lay out the plan, give you some transparency using charts, using options, all the pricing that we have available so that you can be a better investor and trader. All right, we'll see you at 1:30 Eastern Time at Strategy Now. Till then, have a great trading day. Take care, everyone.